Hey guys, we're living in stressful times, like with record inflation, maybe a little bit of a dip in the economy, obviously global panic. Knowing what to do to protect yourself and your family is quite difficult, right? Like because you can't simply live off the savings until, all this goes away. You're not getting ahead. Inflation is eating up your savings. Anything in the bank is going backwards. Interest rates have risen so much. Instead of just relying on banks to get you ahead, you need to plan. Like you need a plan to safely invest in property and potentially make passive income that'll support yourself and your family now and in the future. Because when, let's say, a recession strikes or inflation is high, one of two things usually occurs. Number one, bank accounts flatten for most because they don't know how to survive and prosper. And number two, few make a lot of money because great opportunities arise in times like these. So despite a downturn, true property investors are actively and confidently investing in properties because of that, that whole adage that property rises, hard assets rise in times of inflation. So brush off any of those people that are saying that real estate in Australia isn't lucrative anymore. And this episode, I want to share with you actually just a story, like a story from the horse's mouth, so to speak. So we have an amazing property investor. His name is Shahbaz. He lives in Melbourne and he wanted to be a property investor. He didn't want to get stuck and live a life in that sort of 30-year principal place of residence mortgage prison. He'd read all the books, did all the seminars, listened to all the podcasts, but he still wasn't satisfied. Everyone was promising the world, but saying that he needed to pay them a fee per property to get ahead. He just didn't buy it. So instead he took education up. He did the Property Investment Accelerator. Now he has two properties diversified across Australia with instant equity and solid cash flow. They're growing like really rapidly despite Sydney and Melbourne going down, despite interest rates going there. These properties, not guys, I don't know why I said that. These properties are actually growing in value, and it's just really textbook interstate property investing without catching a single fly or dropping $15,000 on overhyped buyer's agents every time. So here's how he did it. Hear from him directly. He'll share exactly how he bought interstate, the warts and all, the challenges, the experiences, the joys of it all, the locations, how his mindset shifted, what his strategy is, short-term, long-term. I just think you'll get so much value. So yeah, enjoy, guys. Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you. Shahbaz, I know we've already been talking, but once again, congratulations on, like I was saying before, on some great properties.
Yeah, thanks, PK. Thanks for having me, and thank you for giving me the opportunity to kind of learn and progress through my property journey. And I'm very confident what I have achieved so far, and I can always rinse and repeat moving forward. So appreciate it.
No, and let's just go through the properties real quick. So the first one, and just reading here, is in Perth. The purchase price was $415,000 and the rent is $500 a week. So, really, really, really good yield. And of course, just because it's a good yield doesn't make it a good property. The data, the underlying data for short-term and long-term growth prospects are very, very good. And the second property was purchase price $456,000, and this was actually, based on comparables, the actual valuation for this should have been or could have been $485,000. $5,000. So almost $30,000, you could say, under market value or instant equity. So that's a fantastic outcome. And I love the yield on this because the rent is 590, right? 590 a week. So that's, well above 6%, yield. So once again, really high cash flowing properties that, bought under market value with great growth potential. I suppose, Shahbaz, you were saying just when we were talking before that you've already bought your principal place of residence in Melbourne, and you were saying how, you could potentially build another couple of dwellings on it that has some value add potential. Like what kind of got you interested in investing in properties? What got you to develop a goal for yourself that you want to buy 2 properties in 2022?
Yeah, thanks for sharing both the deals. And let me just quickly go back to 2020 and give some
Sure, yeah.
context before I come up to these properties. So, in 2020, I had savings around 10-20%, and I was just hunting for a house. And yeah, spoke to a lot of people. Everyone kind of gives different perspective, and I think with I'm kind of person who likes to get involved, and I can see that property is like $500,000 worth of transaction. So I want to make it sure that yeah, it's right, and I've done my part. So I remember I went through about 25 inspections when I wanted to buy my PPOR, and I didn't know how things will work and how would I be buying investment property down the track. But I do learn very important thing that it's about building the kind of dream home later, and like your idea of rent vesting. I mean, I have a similar thought on that, and that's why I didn't buy a brand new property. And back in the days, people were talking about those grants. In 2020, the government had released some kind of different grants. I didn't even bother. My aim was to acquire something which has the capital growth potential. So yeah, when the right property came, I bought it in 2020, and then around 2022, when I could see the signs that the property has gone up in value, and the evaluation was close to 200K in equity. So that got me really interested that, okay, now I'm in a very good position. Like the evaluation is 200K equity. So I can easily buy 2 investment property now. So that's when in 2022 early, I started to look around. And again, it's just my thing. I want to be more involved, and I was actively trying to see what's available. Like there has to be some way where we can do this, buy the investment property, like how the elites or those who can do it better. So I remember I've read 3 books. I was looking into commercial property, and I read a book about I don't know, I think it was rethinking investment. Don't know the name. And then I could see that every time I read a book, it all comes down to there is a catch behind. Like there is someone, a buyer's agent, or there is a selling point, and they have a team behind it, and then they will be talking about that. Yeah, we can help you with this. And so I was coming to that point every time, those seminars, like property seminars, and it all come down to they would do it for me. So it just didn't make sense, and somehow someone recommended your channel, your YouTube channel. And I think when I started going through the videos, and that's where I realized that our mindset are alike, and this is what something I'm looking for, where you talk about how we can learn how to do it ourselves. So yeah, I think about that was there, and I started exploring and did the course, and the course pretty much taught me how to purchase both the properties.
Yeah, no, amazing. And yeah, you definitely took the bull by the horn, so to speak, and got the result. Just one question that came to my mind as you were saying that you built equity in your principal place of residence between 2020 and 2022. A lot of people think, well, I have equity. That's great. That means I have less debt as a proportion of the total property value. why not just continue to pay that debt down and, hopefully in some number of years in the future have no debt on the property? Like, why get more debt, more properties? Why not just, you saying you worked at one job before, now you work two jobs, social welfare worker, etc. Why not just go down the path of paying off your property and just living a comfortable, so to speak, relaxed, stress-free life with no debt?
Yeah, I think like because I have been like reading and I listen to your podcast and learn from those who have done this before in the past. I think what I've learned that the faster way to like kind of pay off the debt is actually manage the debt properly. And the way we do it, like by obviously increasing our portfolio, and I'm much comfortable because I've done my homework and I'm comfortable to a certain point where I can manage a certain debt, and that way I feel it's faster to kind of pay off the debt. And investment properties are just like they are producing rental income from day one. So that way in maybe 10 years time or 15 years time, I will be in a position where I can pretty much be very confident as to what decision I've taken in the past, and that will kind of help me manage my debt properly.
Yeah. So that's really, truth is rather eloquence is truth spoken concisely. And I think you summarized it really well. I mean, you can try to pay off your principal place of residence over 30, 40 years. You probably get there, but is it the dream home? Probably not. And by just getting more debt, good debt in the short term, that compounds your assets in growth, and you can sell one or two of them and get your quote unquote dream home sooner if that's what people want to do. So it's a mindset thing, as you said a couple of times. And so the other mindset thing that I just want to poke is that you're based in Melbourne. Like a lot of people in Melbourne, like the affordable parts of Melbourne are like the western corridor, like towards the western suburbs. There's a lot of new estates coming up, a lot of house and land packages, a lot of new land being bought and sold. And like, let's be honest, they have also increased in price over the last couple of years, maybe not as much as other more worthy investment locations across Australia. But why didn't you just, I don't know if you have family, friends around there, but why didn't you just follow the herd, so to speak, and say, look, I'm comfortable with Melbourne. I live here. I can drive past. Why don't I just buy out near Melton or, Hoppers Crossing or Tarneit, Dragonina? Like, why did you decide to buy all the way across Australia in Perth?
Yeah, pretty much. Yeah, you're exactly spot on. Even though we live in Gold Coast, but when I was doing my homework and I found exactly where people are talking about Melton and other western side Melbourne suburbs, but I just had that the gut feeling in me that this is not the right time, or the ship has sailed from Melbourne, and the data wasn't really pointing towards Melbourne. And I think that the point when I kind of started educating myself from your videos, and I realized that if there's an option where I can buy better locations which the data is leading up to, and it makes more sense, then why should I just try to buy my backyard, as to say. So I think doing the course, kind of, it is very self-explanatory and it's a no-brainer. And like, obviously, I'm a big believer that the Perth has got so much more room to grow based on so many other economical and different diverse background. So yeah, I think I wanted to actually buy both the investment properties in Perth. It's just that it was a very hot market, so I had to look in Queensland. So yeah, I feel like it's no brainer if we start, like, really start to educate ourselves. We will see that there's a lot more opportunity, like, across Australia. So yeah, that's the
Yeah.
reason.
No, I'm actually glad that you bought one of them in Queensland, because diversification is always an age-old principle. And the suburb that you bought in regional Queensland is one of my favorite suburbs, actually, because it gives, as you know, such great yield. And I think it's actually a premium suburb. It's not like lots of investors are just flocking there. There's mostly owner occupiers. good, households, you could say, with good incomes increasing as well. Did you find it difficult to buy, sitting in Melbourne, to buy in Queensland, to buy in Perth? Or maybe another way to ask the same question is, what challenges did you incur, buying, transacting, negotiating, signing contracts, valuing, etc., properties from, thousands of kilometers away?
Yeah, I think I had like two challenges. So the first was like, because I'm a casual worker, I have never worked like a full-time job. And I had to change jobs because when COVID happened, like I had another job. So I really had to figure it out, that how I need to balance my finances. And the other challenges, like what I really faced was, maybe like I'm a man of few words. So that how to negotiate and that build that rapport with the sales agent. I started interviewing a buyer's agent at that time. uh, just I thought like, okay, let me get another perspective as to, okay, will that really help me? And then to be honest, when I realized that I was coming up with my strategy as to, okay, what I'm looking for in a investment property, and I could give them, okay, these are my top priorities, which I need in an investment property. And I couldn't really see that they kind of had that thought process, or they were adding more value in my circumstances. And yeah, that's when I realized that I've already done half of the job, mostly the core. If I just needed to go back to the course and start reevaluating myself and try to just do it in a very disciplined way. And I think moving forwards, that's what I did. I kind of put in more effort. I had to put in a lot of effort in order to get that Queensland property. So yeah, I mean, it all comes down to maybe following the process as it is taught in the course. So that's great.
Yeah.
Yeah.
Yeah. And that's a good point that you make as well, that, whether it's this course, another course, or anything in life, you do have to be disciplined. You can outsource, like you investigated, but ultimately, like I always say, no one really cares about your money, your goals, your outcome as much as you do yourself. And so if you are going to do it yourself and get the best result, you do need to be focused, like disciplined, with some mental stamina. And so I'm glad that you made that leap and you got there. And then you're a man of few words, you said. So thank you for doing this interview, by the way. In the Queensland property, you got this for 456. The value is about 485, so roughly $30,000 under market value. So before, you said you were struggling in negotiating, but then presumably you did really well in this one. Like, what was it that allowed you to get this one at such a sharp price? Because people will think, well, PK, Shahbaz, if it was valued at 485, then surely the agent knows its value. Why would they sell it under its true valuation? Surely the seller knows its true value. Surely there were other buyers that were willing to give the true value. How on earth can you get it at 456?
Yeah, I mean, that's a very good point. And I think what happened was, in order to like kind of get this deal, I had missed out on maybe 7 or 8. I had like a couple of suburbs in Western Australia and Queensland. Queensland just 1 or 2. So I had been like doing this homework, like repeating so many times. So uh, the properties which I was missing out on, I think I was just learning every time, and I was learning live what's happening on the grounds that time. So that way I was like getting a sense of what's exactly the true value is, and missed out on a lot of properties. And it was close a lot of the time. Like it seems really a good deal, but when we do our due diligence, and the property manager is a very important tool in this, because like they are our eyes and ears on the ground. So based on their data, what they provide the feedback, I was just doing my own maths and trying to come up with the terms and condition and the price point. So after missing out on so many, and I was at that point where I could tell, it was a very repetitive method, so I could tell what exactly the price point is, and obviously the course has got the tools to showcase that. So I think this one had a kind of an opportunity, because close coming to December, there's a lot of gray area where the solicitor kind of says that, yeah, the settlement can't be at this point or that point. Even the banks kind of, they want to take more time for to provide the finance clause. So I was negotiating back and forth. I had like so many emails, and I could tell that, okay, based on the property manager feedback, I could see that there's lots of maintenance work is required and all these things. So I was like conveying back and forth a lot with the vendor. And I think close to December, the vendor was like in a really rush to have the sale done. So I think at some point he did not agree for the deal, but I just had to push the price a little bit up, and then yeah, I think finally he had to agree, uh, given the circumstances. Yeah.
Yeah, nice. And I often say that December coming close to Christmas is like some of the best buying opportunity. People will probably watch this video too late. It will be post-Christmas by the time that people watch it, but for next year perhaps, because sellers really have this sort of mindset that they want to start the new year fresh, clean. They want to have moved on. They want to have let sleeping lions lie, bygones be bygones. They want to create a new chapter in their life. It's not like a tax thing, because obviously the tax year is different. It's just a mental thing. And so, you can really push them. You can really kind of bargain. You can really negotiate really well. And I'm glad you were able to negotiate, obviously via email, back and forth, back and forth, back and forth, with confidence, because you said before that you weren't previously so confident. So this time you kind of learned more on the job and got there. So, I mean, I'm very, very happy actually especially for the second property. It's just a terrific deal. And last question that I'll ask Shahbaz is, there's a lot of uncertainty in the world, like there is every year. There's interest rates. Maybe they're going to go up more. Maybe they're not. Inflation, it's looking like it's peaked, but who knows, what's around the corner. Now you have so much more debt than you started 2022 with. You're working two jobs, and then actually next year you're perhaps going full time into a 2-year university course, where your income might be a little bit less than what it is today. How do you reconcile all of these things and sleep at night, knowing that, is this really the right decision you've made buying these two properties, or is it actually a little bit risky? How do you foresee the future?
Yeah, no, it's a very important point, and I think that's the point where I can see all my peers around, like they are kind of in that zone. And one thing what I've noticed that people don't talk about is that, like, okay, the interest rate has significantly gone up, and so is the rental. So just my Perth property, I think that particular suburb, the rents has almost gone like 38 to 40% in the last 8 months. I think that's for what it shows. So there was a time, like when 2020 happened, there was very low interest rate, and I'm sure people have had buffers just like I did. So I knew that it is not going to be there for a long time. So I have got quite a large buffer in place, and I think I just saved it because there was a good time back then, and I just prepared for it. And I know that I consider that maybe even if it goes like 1 or 1.5% extra, I have all the right buffers in place. So yeah, I just want this to be passive, more in the passivity side rather than active, because I want to focus on my career. So I've done all the math, so what I could, given like the worst case scenarios, and the data is showing that it's safe, and it gives me very peace that now I can rest and like kind of focus on something else. Yeah.
Yeah, nice. Yeah, and that's a great thing about property. Kind of, it's like short sprints. You bought these two properties and you can just forget about it for, like, let's say a couple of years, and then come back when you're ready to build your portfolio. And in anything in life, risk equals return. But what I particularly appreciate about you, and I'm just learning as I'm talking to you now, Shahbaz, is that you're actually very thoughtful, very measured, very considered in your approach and your strategy and in your thinking style. So I would probably add that calculated risk equals return. That's probably how you've approached it. And that's what I would ask people. That's the way that people, should approach it. If you've done your own calculations and your conclusion is, actually, I'm not comfortable buying property, then don't buy property. But at least do that calculation, at least do that math, like you said, because you might come to the conclusion that actually in 10 years' time, my life will be much more better off if I do invest right now. So yeah, that's exactly what you did. So big congratulations, Shahbaz. I was very happy to receive that email from you. I think it was a few weeks ago now. So yeah, very, very good work. Congratulations and well done.
Yeah, and just like final thoughts, I think the community, the your Facebook community and the Property Investor Accelerator course, there's a community forum. I think people are very helpful, and a lot of people have reached out to me. Like I had lots of queries in between whenever I had, so I made like good friends, and I think a lot of the my perspective I have kind of learned from it. So yeah, it really is a value add, and yeah, wouldn't have done it without your course and like without your support. So thanks so much.
Yeah, no, good call out as well. In this day and age, in 2022, I feel it's a little bit pointless to follow just a single guru or something like that, because they're limited. Everyone's limited. I'm limited as well. I'm fallible. But if you have a community of thousands of people who have the same mindset, the same drive, and the same, I suppose, resourcefulness to achieve what you want to do, then that's what's truly powerful. So within the course community, yeah, we have some fantastic people. So I'm glad that you made some friends, which is always nice to hear as well. So hopefully that did actually bring you a ton of value. Guys, I just want to say thank you for being with me every single week. If you've left a review on Spotify or iTunes, big gratitude to you. I want to read one recent one out. It says, this podcast can potentially change your life, not just in the knowledge of property investment, in his systematic approach to data, but following PK for a long time, you learn what is really important in life and how we can achieve it. I would highly recommend to anyone who wants to achieve freedom. I really love that. The account was life-changing. They didn't give their name, but I really love that, because not everything is about money, but money certainly helps. Okay, so hopefully you're sticking with me each and every week, and I'll see you next week. Thank you, everyone. Bye.